What's up, everybody? Steve here with Steve Invest. I do disagree with Grant Cardone. This guy has done extremely well for his investors that are investing in the Cardone fund. And I appreciate everything that he's doing. I appreciate the advice that he's putting out there on the internet and on YouTube. However, I don't think that one size fits all. Look, there are many benefits investing in multifamily projects. However, it is difficult to get a safe and secure loan when you are investing in large multifamily projects. And here's what I mean by it. Let's say, for example, you obtain good financing and you have good rates and terms and so forth. However, that loan balloons out in a 10-year period. You really can't predict what's gonna happen 10 years from now. So for example, let's say you buy a 100-unit apartment complex in an area of town, and then over that 10-year period, there are a lot of other investors that come in and overbuild in that area. Because now there's an oversupply, it brought down the rent rates, which in turn brings down the value of that asset. So if the value of that asset was not appreciating over that 10-year period and actually declined in value, that 10 years comes up and you have to do a refinance or you have to sell the project. Now, if you sell the project, you have to ensure that you have the equity in the project. And if you do a refinance, then you have to make sure that it's gonna appraise for current market value. And I think a lot of the audience watching Grant Cardone, as well as a lot of these other guys that invest in real estate and teach real estate investing, they are smaller investors. Would they like to get to that ability to purchase these large commercial projects? Sure, but there are other ways to invest in real estate on a smaller scale and with safer debt positions. So for example, if you have something that is 4 units or less, you can get conventional financing, 30-year fixed terms fully amortized over that 30-year period. So it's way safer to invest in a project like that. And secondly, this is gonna range from single family, duplex, triplex, and quadplex. There's a way bigger pool of people that would buy those properties. So if you got into a pinch and you had to liquidate a property because you needed the cash for something or an emergency, you have a way bigger pool of people that would potentially buy those properties from you, unlike a smaller pool who could buy, say, a 100, 500 unit apartment complex. So the point I'm making is I think Grant Cardone has a lot of good sound advice out there, but again, I think a lot of these gurus out on the internet and out on YouTube, they think it's a one-size-fits-all. You have to invest this way. If not, you're not doing it correctly. And I just don't believe that. I think that everybody needs to do their homework and see what fits best for them, their family, and their real estate portfolio. As always, I appreciate you guys sticking with me. If you got any good value out of this, I appreciate a big thumbs up, and I'll see you guys on the next video. See ya.